Everything feels a little shaky right now, doesn't it? Inflation seems like it's here to stay. Currencies feel weaker. Markets seem to swing wildly from one day to the next. And whenever fear starts to rise, one question always comes back. Should you put your money in gold or silver? Both are precious metals. Both have been used to protect wealth for thousands of years. But they are not the same investment, not even close. Today, we're going to break this down, clearly not based on emotions, hype, but based on how these two assets actually behave and what the future is quietly shaping up to look like. This question matters now more than ever because we are living in a time where trust in paper money is fading. Governments are printing more of it. National debt levels are soaring to historic highs. And your purchasing power, the value of the money in your wallet, is shrinking. People are starting to realize that money sitting in a bank account is not the same thing as true wealth. That's why gold and silver are back in the conversation. But choosing the wrong one, or choosing for the wrong reason, can be a costly mistake. So let's start with the basics. What is gold? Really? Gold is not an investment you buy to get rich quick. Think of gold as insurance. For centuries, gold has done one thing extremely well. It holds its value when everything else is losing it. Gold doesn't depend on new technology. Gold doesn't depend on a booming economy. Gold doesn't depend on the latest trends. When currencies weaken, gold tends to strengthen. When public confidence in financial systems falls, gold rises. When uncertainty and instability increase, gold becomes very attractive. That's why governments hold it in their vaults. It's why central banks around the world are buying it up. It's why gold quietly sits behind the entire global financial system. Gold is boring by design, and that is its greatest strength. Now, what about silver? Silver is completely different. Silver isn't just a store of value. It's also a critical industrial metal. It is used everywhere. In our electronics, solar panels, medical equipment, and electric vehicles. It's a key component in countless areas of industrial technology. This dual nature makes silver powerful, but also much more unstable. Silver's price tends to rise when industry grows and manufacturing is strong. But it also falls when economies slow down and demand dries up. Silver reacts much faster and more aggressively than gold. This is why you often see silver's price making bigger moves than gold's, both up and down. Silver isn't just money. It's a commodity that is directly tied to the pulse of the real, working economy. And this brings us to the key difference most people miss. Gold is about protection. Silver is about potential. Gold moves slowly and steadily. Silver moves violently and unpredictably. Gold protects your purchasing power over the long run. Silver offers the chance to multiply it, but with greater risk. This means gold rewards patience. If you're looking for a safe haven, something that will still be valuable in 10 or 20 years, gold is your ally. On the other hand, silver rewards timing. To profit from silver, you have to understand its cycles and be prepared for a wild ride. If you panic easily when prices drop, silver will punish you. If you expect fast returns from gold, you're going to be disappointed. Let's dig deeper into why gold performs so well in uncertain times. Gold thrives when confidence disappears. When people don't trust their governments, when national debt feels completely unmanageable, when inflation is eating away at savings, when markets become chaotic and unpredictable. Gold doesn't need economic growth to do well. It only needs fear and instability. That's why gold often rises quietly in the background while everyone else is distracted by the latest stock market craze or cryptocurrency hype. Gold isn't exciting. Gold is reliable. So, why can silver explode in certain cycles? Silver shines when industrial demand increases, when the world pushes for more clean energy and solar panels, when manufacturing is booming, when new technology scales up globally. Because silver is consumed in these processes, not just stored away. But here's the flip side. If economic growth slows down, that demand for silver can fall off a cliff. If a recession hits, silver prices can crash much harder than gold. Silver represents a huge opportunity, but that opportunity always comes with significant risk. This leads us to volatility, or what I call the emotional cost of investing. Most people seriously underestimate how much volatility can affect their decisions. Silver can move so fast, both up and down, that it forces people into making emotional choices. They get FOMO, and buy at the peak, they panic and sell at the bottom. They get shaken out on big drops. Gold rarely causes that kind of panic. It also rarely creates massive excitement. It just sits there, quietly preserving its value over time. If you can't control your emotions as an investor, silver can be a very dangerous game. But if you can't handle the boredom of a slow and steady asset, gold will probably feel useless to you. In the end, your own personality might matter more than the metal you choose. Think about your goals. Are you focused on long-term wealth preservation or short-term gains? If your goal is to protect your wealth for decades to come, for your children and grandchildren, then gold is usually the superior choice. But if your goal is short to medium-term growth, and you have a high tolerance for risk, silver can potentially outperform gold by a wide margin. Think of it this way. Gold is a shield. Silver is a lever. Many smart investors don't just choose one. They understand that each metal has a specific role to play in a portfolio. Gold can provide a stable foundation, while a smaller allocation to silver can amplify potential returns. The biggest mistake people make is treating gold and silver like they're stocks. They are not. These metals don't generate income. They don't run businesses. They don't innovate. Their purpose is to protect your wealth and respond to economic conditions. People buy precious metals expecting all the excitement of the stock market, and then they sell them because nothing is happening. A few years later, they often regret that decision when they see how much their currency has lost in value. Precious metals reward patience, not constant attention. So, what does the future likely hold? All signs point to continued uncertainty. Rising debt, pressure on currencies, geopolitical tensions, and major economic imbalances. In an environment like that, gold remains fundamentally relevant. Silver's role becomes more situational, rising and falling with industrial cycles. Gold's place as a core financial asset is unlikely to disappear. Silver will continue to be a story of supply, demand, and economic growth. That's why gold is often seen as the foundation of a portfolio, and silver as an optional addition. So which one is better for you? There is no single answer for everyone. Gold is better if you want stability, if you want protection, and if you want peace of mind. Silver is better if you want higher upside, if you understand and can handle volatility, and if you can tolerate big price swings without panicking. The smartest strategy isn't about choosing sides. It's about choosing your purpose. Here's a final thought. Gold doesn't make headlines. Silver doesn't make promises. They don't care about our opinions or the latest news cycle. They simply respond to reality. So the real question isn't gold or silver. The real question is, do you want protection or potential? Because the future will reward those who truly understand the difference. Thanks for watching. If you found this breakdown helpful, be sure to like this video and subscribe to the channel for more clear, no-hype financial insights. See you next time.